In November of 2020, Teladoc Health bought Lovongo for $18.5 billion. Today, Teladoc Health is worth $9 billion. On today's show, we're going to be talking about lighting money on fire because that's exactly what's been happening over at Teladoc Health for the last year. What is going on, investors? Hopefully you guys are doing well out there. And if you've taken my advice and to have steered clear from this company for over a year now on the channel, despite the number of numerous comments that I get every time I post a bearish video about Teladoc, well, you've done very well, because over the last year, everybody who have ignored the very clear as day financials, which we'll walk through on today's show, we'll take a look at how this company has lit over $6.6 billion, not million, $6.6 billion worth of equity just over the past quarter. This is a company that's worth $9 billion. They just lit $6.6 billion worth of your money as a shareholder on fire. We'll talk about it from a financial perspective, but we'll also look at this from a technical perspective. Get your skis on or your snowboard, because you're going to be sliding down one of the steepest downward hills that we've seen here on the stock market in a long time. That is the Teladoc stock chart. This thing is, I can't believe where this thing's at. It's down here at about $34 per share. That's after trading closer to $56 per share earlier today. The stock is down over 38% in the after hours, because when you light $6.6 billion on fire and your company is worth $9 billion, well, yeah, you're going to get absolutely toasted from a financial perspective. I can't believe they haven't fired management over at Teladoc Health at this point. We'll talk about that more here in a second. But this obviously is on the heels of a disastrous year, and we came in with our earnings in Q1, and they're a complete disaster. Revenue increased by 25% year over year to about $565 million. But what is having people really run for the hills is the full year guidance coming in at just $2.4 to $2.5 billion. The earnings per share, or should we say the losses per share, going to a balloon to a negative $43 per share. That is a loss per share of $43. A lot of people ask me, especially newer investors, usually like younger kids, like, what is a stock? When I buy a stock, what do I get? Well, you get a ownership of earnings. And in the case of Teladoc Health, you own negative $43 per share in earnings. That is an absolute disaster. Let's get over these numbers. We had that 565 on that earnings side. Last year, we're sitting at 453. Again, you kind of mid-20s growth on that. It's a high margin business. That is what the bull case argument is the fact that this company has really low cost of revenue. Okay, off $187 million in costs, they generated this 565. But what I've told you time and time again, literally every quarter for over a year now, when we review Teladoc Health's earnings, okay, every quarter over quarter for over a year now, what I've been telling you with the stock is it's not the high gross margins. That's the problem. Okay. It's the advertising spend that came in at $133 million versus $90 million the previous period. It's your general administrative expenses, which came in at $104 million when you generate just $565 million worth of revenue. And it's also the fact that this company bought another healthcare company literally at the top of the market and a peak valuation. They bought Lovongo for $18.5 billion. Do you think the executives over at Lovongo are sipping their Mai Tais in the Caribbean as we speak? Yes, they absolutely are. And they're probably looking down at their brand new 24 karat gold Sky Dweller as well, because Teladoc gave them the most premium valuation. And we've seen in the most recent quarter, this company had to write that investment down. When you pay $18.5 billion for a company 2 years ago and your total company is worth $9.3 billion, well, yeah, the CPAs are going to tell you, you got to write that investment down on the balance sheet. And they had to make a goodwill impairment of $6.6 billion. Now, this is non-cash to the quarter. You'll see evidence of that when we get to the cash flows, but it obviously has a tremendous impact on the stock. As we see in the after hours, the stock is down over 35%. So don't let the people tell you, well, they overpaid for Lovongo, but it's a non-cash charge. No, it absolutely destroys you as a shareholder. So when you see companies like Microsoft, when you see companies out there like Google and all these companies with lots of cash start making acquisitions, well, they better be good ones, okay? And then when you're talking about a company like Teladoc, it made like one of the largest purchases by any company in that year. Well, you better hit a home run, and they absolutely swung and missed on that one. We see the loss from operations in the most recent quarter up over $6.6 billion. Again, this is a $9 billion company, and they lost $6.6 billion in the quarter. Again, the vast majority of that is tied to this 6.6. So if you want to strip that out, and you can, when we look at cash flows, we'll strip it out, but they lost $69 million in the quarter. And again, last year they lost 84. So quarter over quarter getting a little bit better. We're essentially break even, not quite there yet, but they're almost running kind of break even operations over at Lovongo. But management just showed you how idiotic they are by closing on that Lovongo deal for $18.5 billion. The fact that they have jobs and they haven't been fired, and this management team hasn't been completely overhauled, in the fact that they paid themselves $86 million in compensation last year. They had the decency, at least the slight decency to shareholders, to reduce the share-based compensation from $86 million down to $60 million. We're not talking about for the whole year. We're talking about in a quarter where you burn through $6.6 billion of equity. You still had the audacity to give out $60.4 million worth of stock. Well, I guess there's a small win for investors there, but I can't believe these people have jobs. Now, you pull down that massive net loss, okay? Again, it has that $6.6 million of goodwill impairment. You get to add that back in because that's non-cash, because guess where the cash went? It went over here to Lovongo, okay? And so now you got to recognize it on your balance sheet, and you get down here to net cash provided by your operating activities actually paints an even worse story. So even when you factor in this let's just ignore it, that they bought a company at the peak of the market for $18.5 billion. It's like the people that bought a house in 2007, or people that paid millions of dollars for NFTs that are now worth hundreds of dollars. Well, it still doesn't paint that great of a story, because last year on a quarterly basis, you lost 18, now you lost 31. Okay, so it's not getting any better over at Teladoc Health. And quite frankly, I wouldn't expect it to get any better anytime soon. From a balance sheet perspective, they still have a pretty well-capitalized balance sheet. That goodwill obviously had to get sliced in half. You see it went down from $14 billion down to this 7.9. So your total assets went down tremendously, obviously year over year, when something like that happens. From a liability perspective, still a really financially secure company. They have quite a bit of convertible senior notes on here. We'll see, considering how much this stock price continues to decline, if these people want to convert to equity, or they want to convert some other way. This company certainly would be in a difficult financial position if they had to come up with this $1.5 billion anytime soon. From the cash perspective, that's certainly going to weigh on shares in the future as well. Now, from a technical perspective, there's not a whole lot to see here, other than you've been on this massive downtrend, and you don't expect this downward trend to stop anytime soon. Sure, there's areas of support down here at $33 per share, but we probably said that at $85, and we probably said it at $50 as well. I would steer clear of this stock, absolutely clear of this stock. There's no reason to buy these types of companies that make these idiotic decisions to buy companies at the top of the market for $18.5 billion. And now a year later, the company is worth, the whole company, Teladoc and Lovongo combined, are now worth less than $9 billion. This company is not making any money. They're not guiding to any types of profits. Their cash flows are not only negative, but they're worse quarter over quarter. Guys, there's so many better investments than a stock like this. Quite frankly, just cash sitting under your mattress is a better investment than Teladoc Health. If you've held this one for any length of time, take it as a learning lesson and learn how to get out of stocks and set stop losses. Look, I've gotten out of a lot of stocks this last year that I actually really like and are wildly profitable, but at some point you gotta learn when to get out when the negative momentum is there. Certainly in a stock like that, it's been present for over a year now. That was Teladoc Health. Hopefully you guys have a great day. Good luck with your investments.